Hey y'all, Lisa Davis here, the trusted banker. And we got breaking news, lots of news all over the weekend. I'm going to get to some of it today that I find is important to me being in the financial industry. It's got to do with fintech, banking, and all kinds of things. So my name is Lisa Davis. I am the trusted banker. This is Black and Bankable. Let's talk about it. Big news just dropped over the weekend. Block, the company behind Cash App, has officially become a bank. They have officially become a bank. And that means they can now offer all kinds of new financial services, including the ability to buy now, pay later options through their recent Afterpay acquisition. So what happens is Block, that used to be Square, has now acquired Afterpay and Cash App. And so what that means is that they're going to be able to offer loans, buy now, pay later, buy now, pay in four. And honestly, we have been watching the financial technology industry for several years now. And in recent years, the fintech industry has experienced remarkable growth, revolutionizing how we manage our finances. And in a pivotal development, this sector and this attainment of the Federal Deposit Insurance Corporation, these fintech companies are now able to get FDIC insured. And what this does is it ensures the customer that their deposits are protected by up to $250,000. And I know I've talked about this in the past, and I've said, watch the fintech companies. Well, we're going to talk about several of them today that have found ways, very strangely, they have found ways to get FDIC insured. So let's explore some more of the notable fintech firms that have achieved FDIC insurance and the unique services that they offer. So let me share my screen here. I want to talk about Varo first. So Varo Bank made history in 2020 by becoming the first all-digital national bank to receive an FDIC charter. So they don't have any physical branches anywhere. They're an online digital platform, which is huge. And this milestone allowed Varo to offer a comprehensive suite of banking services, including checking and savings accounts, debit cards, and personal loans by eliminating traditional banking fees and providing early access to direct deposit. So Varo aims to promote financial inclusion and simplify banking for its users. They also had something else in here that I did like that I saw, as far as they will help you save money. So instead of, I think they're doing the roundup where if you use a debit card and there's extra change available, they'll help you save those dollars somewhere. They help you manage your finances and make sure that you're not overspending. So we're going to keep watching Varo. Again, this is the new industries taken on with the FDIC insurance. That is one thing I'm very happy about, because this means consumers' monies are going to be insured. And it also, these industries also cater to the unbanked, the underbanked, or the people that don't have strong credit but need to get in and build up their credit. So as long as they keep real great products and services, it should be a cool thing. Let's look at another one. SoFi. I do love SoFi. I've been following SoFi forever. They're one of my faves. They started with refinancing student loan debt. I love SoFi. They've always been a really strong banking partner. They also now have FDIC insurance. In 2022, SoFi acquired a California-based bank securing FDIC insurance. And that's one of the themes that I see with a lot of the fintech companies right now, is that they purchase FDIC insured banks, maybe a small bank. And this enables them to offer insured deposit accounts. So again, SoFi, your money's insured there. As a consumer, they have their own FDIC insurance. This strategic move enhanced SoFi's ability to provide a broader range of financial products under one roof, catering to the diverse need of its clientele. Now here we go talking about Chime, one of my least faves, because Chime keeps saying that they're FDIC insured, but Chime is not. I didn't pull them up. Let me pull them up. And I want to keep emphasizing the differences in this, because it matters. If this is the way that banking is going to go, it matters to consumers, because you want your money protected. We don't want to see people falling into weird situations where they think their money is protected, they think their money is there, something happens, and then all of a sudden their money is not there or it's not available or whatever. So Chime has had some difficulties in the past. It says again right here, Chime is not a bank, and Chime is, let's go to, this is their official site. I don't want to see their advertisement. Still got their advertisement. Sign up in 2 minutes. I don't want to do all that. There we go. Thank you, Chime. Chime is a fintech company, not a bank. And so Chime, what they do is they're a widely used mobile banking app partnered with the FDIC, but they're partnered with the FDIC insured banks like Bank Corp Bank and Stride Bank to insure its customers' deposits. The only problem I see with Chime is that the deposits they take in have to qualify to be deposited into the Bank Corp Bank or Stride Bank, who both are FDIC insured. If not, Chime will hold the funds within their integration system, and that means that those deposits are not FDIC insured. So Chime offers features such as no fee overdrafts, early direct deposit, and automatic savings programs, positioning itself as a user-friendly alternative to traditional banks. But what I have also seen is that Chime offers credit repair builder with, it does have some fee with that. So Chime is still not all the way there. This is a very new industry. Fintech is a new industry. We're going to see a lot of mistakes. We're going to see things happen. We're going to see some are not as strong as the others. I still think that Chime has a ways to go, but it's there. Just know that your money needs to be deposited into their partner bank. And if it's not insured. Okay, so let's talk about another fintech company. Well, I'm gonna go back to the first one I was talking about, which was Block. This was interesting. Block owns a lot of things. So this is Block. Okay, so Block, formerly known as Square, ventured into FDIC insured banking by acquiring a small bank out of Utah in 2021. So that's how they became FDIC insured. And the arm of Block, formerly known as Square, that bought the bank was Square Financial Services. So that's the arm that bought the FDIC insured bank out of Utah that gave them the FDIC insurance. So now that they have integrated Cash App, Block is a huge company. Block has Cash App, Afterpay, Square, Title, BitKey, and Proto. And so now that they're FDIC insured, Cash App, which is they've integrated with, and Afterpay, Cash App can now give them buy now, pay later loans. And that can, we don't know what the terms of these loans are going to be, but I'm going to assume, as I'm seeing other parts of the industry move forward in short-term, small dollar loans, it could be 3 months, it could be 3 years, to offer consumers that are not able to get financed under traditional ways that could get financed under these types of ways. And the rates are going to be what we're going to be watching to see what kind of rates are they offering, because again, these are non-traditional ways that these fintech companies offer lending. So I feel like it could be a good solution for people that are not able to get banked or not able to get banking loans, as long as the rates stay low. I did see one company's offering up to 36% interest. That's a little bit high. So I'm gonna just keep watching this and see how it goes. But yeah, I think it might be a good solution for some people that are not able to get banked. Revolt is another fintech company. I don't know if I pulled up they are out of the UK. So Revolt Fintech Company is out of the UK. They are expanding into the US market, and they purchased the FDIC insured bank. So Revolt prides itself on a range of services, including multi-currency accounts, cryptocurrency trading, and budgeting tools, appealing to a tech-savvy audience seeking versatile financial management options. Out of the UK, I think I saw a lot of things in the UK as far as fintech and open banking. We're going to talk about that more in a different video, because that's been very interesting. And it looks like the United States, although we're behind in this technology, we are trying to bring this technology to the United States to make banking services a little easier again for unbanked and underbanked. So open banking is another strategy that they're looking at bringing here. So we're going to talk about that a little later in a different video. But the last one that I know about is Robinhood. Robinhood is a fintech company. I'll just go here. And I think this is a good thing because Robinhood got into a lot of trouble. What is that? Well, what are all these things have all this? Robinhood got into a lot of trouble a few years ago. So Robinhood is a free stock trading app. In 2022, it announced that it has secured FDIC insurance for its cash management accounts. This allowed Robinhood to offer customers insured deposit accounts alongside its investment services, enhancing the safety and appeal of its platform. Robinhood now offers, I think, checking and savings account, if I'm not mistaken. And so the attainment of FDIC insurance by these fintech companies signifies a maturation in the industry, but it's still a very young industry. So I don't want us to get confused and thinking that all fintechs are good fintechs. We got to keep watching them. We got to keep demanding what the consumer wants, which is they want their money protected. I think more consumers will be more interested in utilizing these types of services if they knew that if something happened to these organizations, that their money was insured. Okay, this aligns them more closely with traditional banks in terms of deposit protection, and it builds consumer trust, but also encourages a broader adoption of innovative financial services as fintech continues to evolve. The integration of FDIC insurance will likely become a standard, ensuring that customers can enjoy both cutting-edge financial tools and the security of insured deposits. The reason this is important is because banks can't do a lot of the things that these fintech companies can, but they can either sell, be bought out by a fintech company or can partner with a fintech company in order to provide these services for their consumers. And what we're finding is Gen Z is really loving the fintech industry. They're loving the services. They're loving the mobile apps. They're loving the online, the digital. They're loving the not have to go into the banks. And the banks realize this. People don't like to go into the banks anymore. People don't like to go in person. People like to make their banking work from their phone, from their computer, calling in or something like that. And so banks have to keep up with the trends. They have to keep up with the youth. They have to keep up with the transfer of cash the way the consumer wants to do the transfer of cash. So that's why fintech is getting to be very, very popular. And instead of banks trying to integrate all this new technology and they have all the regulation around the things that they can't do, it's easier for them to partner with these organizations or be bought out by these organizations instead of trying to do it themselves. So my name is Lisa Davis. I am the trusted banker, and I will talk to you guys later. Talk to you soon. Bye.